Welcome to Momentous Insights, where we one inside the future, two speak the truth, and three change the facts. My name is Maya Parker, and I'm a 14-year-old investor, financial YouTuber, enthusiastic gardener, Christian, amongst other things. And today we are going to talk about a Canadian company. And did you know, fun fact, Canadians buy milk in bags according to a website I visited? I never knew that. That's very interesting. So we're talking about a Canadian company called Organic Garage. It's in the consumer defensive sector. The industry is grocery stores. Organic Garage owns and operates grocery stores that sell natural and organic products to consumers in Canada. You can see what the company offers as far as produce goes and stuff, but here are what the pictures look like inside and outside of the stores, and that's their kind of logo. So, it was founded in 2005. It's headquartered in Toronto, Canada. The market cap is roughly $20 million. The enterprise value is roughly about $30 million. The insider ownership is 15.6%, so high insider ownership, which is good to see. The ticker symbol for the US, of course, is OGGFF. So here's a quick fundamental glance before we do a deep dive, but keep in mind the enterprise value is $28.29 million. So they have a 22% gross margin. They have roughly 22% gross margin. I believe it's actually a little bit higher than that. But roughly $30.28 million in revenue for the trailing 12 months. The sales increased 25.3%. They have a roughly 6% operating margin, a PS of 0.77, 4+ stores, and they also acquired Future of Cheese. So today we will cover problems, solutions, competitors, management, traction, objections, and what I believe, and what I'm doing regarding this company. So first off, the problems. This can be summed up to one simple equation: Whole Foods equals whole paycheck. So we all know those little stamps or things of those sorts that talk about how healthy the product is. Usually that premium product is thought of as also with a premium price, and that's why they also call it whole paycheck marketing, because you end up spending your whole paycheck with Whole Foods. But the solution to this, to getting prices down on healthy, natural, and organic foods, can best be done by eliminating unnecessary costs that don't affect the quality of the products negatively, and also do not affect the customer experience negatively. Solutions. So Organic Garage has the solution to getting cheaper costs and better value, and the way they do it is primarily by the 3 ways listed below: a simplified labor model, everything is grab and go, small retail locations, 12K to 15K square feet, and highly rationalized SKU base. So the reason for the simplified labor model is they noticed customers were changing from a knowledge-based requirement to a price-based requirement. The consumers essentially don't ask what is quinoa, etc., but they transition to where is your quinoa, what brands do they carry, and what is their price. So by eliminating the dietitian, specialists, service departments, and kitchen on site, they're able to pass those savings onto the shelf price of the natural, organic, and healthy products. Without making those products with less quality or anything like that. None of that stuff happens. They're just eliminating unnecessary costs. So the reason for smaller retail locations in a highly rationalized SKU base is similar to why Sprouts Farmers Market, SFM, started to implement this, which is because when you focus on what sells, you're reducing costs because you're not wasting square footage, infrastructure, or time, overhead costs, etc. on things that don't sell. With all those reduced costs, they were able to pass the lower costs down to their products' shelf price, and also price is a factor in value. So it also provides lots of value for the customers that they can't find elsewhere. More in this soon. Which should also lead to more loyalty and more health enthusiasts or people who want to be more healthy going to their stores rather than whole paycheck foods. But just like ShotSpotter, which I previously did an in-depth analysis on previously, this company is selling outcomes, not anything else. Here's what the outcomes translate to in a more of a math format: 18% to 24% savings compared to in Whole Foods, 12% to 15% savings on a basket compared to competing health food stores, and an 8 to 12% savings on a basket compared to national grocery chains. And if you want me to translate it once again, Organic Garage is more like a Whole Foods rather than the whole paycheck. Without the whole paycheck rather than Whole Foods and whole paycheck, or whole paycheck foods. Also, for the consumer that is online, they have a direct-to-consumer solution as well, which could be as high as 20% of their sales this year alone. Though Organic Garage offers 8,000 to 10,000 SKUs, they also have a program called the HandPick Program, which introduces new products to their customers that they may not offer, but also allows a newer company to get access to traffic and test out their product in a brick and mortar format. Because think about this: these amazing products may sell online for just starting when they're just starting selling, it's probably online. But then maybe they're trying to expand and test out the brick and mortar format, and so they can test it out with lots of traffic through their organic garage stores. And two, Organic Garage gets a combination of a fixed percentage on their sales and a fixed rent based on the square footage they occupy. So it's a benefit. So also three, Organic Garage is also able to somewhat collect data on emerging organic and better options to see what works and potentially acquire them early on while generating revenue directly from them in the HandPick Program. This all allows for one-stop shopping for organic, natural, healthy foods with a great experience at a much cheaper cost. Also, before we move on, follow me for more. Link in the description. You can follow me on YouTube channel, all of that. I have YouTube, Substack, Twitter, Discord, all of that. Link below. Okay, so back to what I was saying. So most recently, they also addressed another problem of providing great products in the dairy space. They acquired the Future of Cheese February 3rd, 2021, which is a wholly owned but independently functioning subsidiary of Organic Garage and is led by two superstars in the industry, Craig Harding and Mr. Fern Pristine, which are two influencers that have appeared on major TV stations and shows, but also have years of experience, reputation, and great connections. And they also, of course, know how to show off their products really well. So Organic Garage now has two disruptive products in the dairy space, which is cheese, butter, and this is in the plant-based subsector, which is expected only to grow from here. It mimics the alternative product well, and I believe the management said it is easier to transport. This is also great timing with the plant-based trend being on fire. Competitors. Since Organic Garage is the main business and really the future of cheese right now is a cherry on top and a very disruptive product, I will focus on Organic Garage competitors. First of all, there isn't many known to me, but here are a few I was able to find. Wild Oaks Marketplace, Lucky's Market, Choices Market, Atkins. Many of these you may not have heard of before because of the scale of which they operate and or the fact that some of them they're in Canada. As far as competitors goes, note that in the broader grocery segment, it will always be competitive, and consumers, I believe, are known not to be loyal, but I believe that Organic Garage has the management and moat to accomplish what they need to accomplish for this to be a great investment today. A note that I made this presentation a little while back, this document basically. Also, let's kind of shift gears to management because you want management that's undervalued. So I prefer to sell on a bad ship with a good captain rather than selling a good ship with a bad captain. So obviously a ship is of no use without a good captain. And at the end of the day, the team you build is the company you build. So analyzing management is important and one of the determining factors if I buy a company or not. So we will deter from the previous a little bit to stop and analyze management. So the CEO, Matt Lerner, which you can see in the top right corner of the following slides, is good, communicates in easy to understand terms, showing his competence and intelligence, just like the other CEOs I've mentioned. Somewhat seems to have a passion for what he does, which I came to a conclusion to after learning he's a fourth-generation grocer, highly experienced food retailer, hand-on operator and manager, and very passionate and entrepreneurial. He also is very straightforward and I guess very entrepreneurial-like and professional, as he seems to show. I'm not trying to pick on him, but no emotions really in interviews. Maybe symbolizing humility, and his hard work symbolizes extreme will. Although it wasn't as easy to tell as most CEOs I covered. These two paradoxical mix of things together symbolize a level 5 leader. Examples of level 5 leaders include Bill Gates, Elon Musk, Mark Frohnmayer, Galileo Russell, Zachary Cox, etc. Here's something also to note about him. He owns about 13.73% of Organic Garage, and insiders altogether own about 15.6% of Organic Garage, according to Simply Wall Street. Also, for more information on the amazing leadership at the company, just research it yourself using various reputable sources, such as, of course, LinkedIn and the Investor Relations page, etc. So about traction. So I got this quote from one of my favorite CEOs, Mark Frohnmayer of Arcimoto, ticker symbol for that company, FUV, which I own a position into, so I'm kind of biased. But anyways, people don't want to buy a quarter-inch drill; they want a quarter-inch hole. Theodore Levitt, or I don't know how to pronounce his last name. So Organic Garage was founded in 2005, like I said, by fourth-generation grocer Matt Lerner, of course, headquartered in Toronto, Canada. This is where they are now. So Organic Garage has 4 stores and one on the way, I believe. The CEO of Organic Garage says they intend to grow up to as many as 20 to 25 stores in Ontario alone, with an eye on the 1 billion Ontario organic food market. Although still expanding the direct-to-consumer segment of their business, where revenue percentage could climb to as high as 20% in 2021 alone. They also have working capital of about $1 million, EBITDA of 2.8 million. Sales increased to 25.3%. They acquired a Future of Cheese. So they have a PV of 4.3, a PS of 0.77, enterprise value to revenue of 0.88, EV to EBITDA of 7.7, EV or enterprise value of 26.63 million roughly. And they have a 6% operating margin, 6.56% return on assets for the trailing 12 months, 30.28 million in revenue for the trailing 12 months. And keep this in mind, this revenue is less than their market cap. I mean, look at the very good food company with their disruptive products in the plant-based food space. So, I mean, they're trading at so many multiples in revenue. Look at Beyond Meat. Look at all these various companies, and this company sits at less than 1 times revenue. That tells me a lot. Also, they have EBITDA of 3.46 million. They have gross profit of 8.62 million and a 22.62% gross margin. Also, now implementing a decentralized distribution center, which will give them 1 million in savings annually, and this goes straight to the bottom line. Lastly, they now have 2 disruptive products outside of the Organic Garage, which is plant-based cheese and butter. Objections: Pity the pessimist versus Admire the optimist. Pity the pessimist: not every great company is a great investment. I admire the optimist. I agree, but I also believe everything has a value at a certain price, and this is no different. This company is growing massively and has a PS ratio, or price to sales ratio, below 1, which is crazy compared on a relative valuation. And the fact that your gross margins are really good for the savings they pass on, and revenue growing high double digits as a grocer and offer better value to their consumers is crazy. Look at this company, and it's cheap. And we haven't even mentioned their recent acquisition of the Future of Cheese, which will be a growth of value beast. Pity the pessimist once again. Okay, if the company's so sound, then why is no one buying the undervalued company? Well, this is like a really good reason. It's like nothing to do with the underlying fundamentals of the company. The company is just similar to many companies in the microcap space that are undervalued until they are discovered. The goal of every microcap investor is to find those hidden gems before larger pockets, including institutional investors, get in or even find it. So I kind of got this answer to the objection from a different source, so that's not a quote on me. So just keep that in mind. That part of the video is not original. So pity the pessimist. Are you even invested in this company, or are you all talk and no action? You should take everything I said in this video with a grain of salt, as I'm not invested into Organic Garage. I was researching this stock over the weekend, or this company over the weekend, and now it's Tuesday. The stock is up 30%, and it's still undervalued, but I'm thrown off by the steep rise, which makes me want to wait to see if it will grow. If it will go down, although that could be a huge mistake. And by the way, so I was recently looking at Peaks, another one of my investments, call they were having, and now I just put in a buy order to buy that company. I think it's a better opportunity than the Organic Garage, so I'm not even really thinking about putting in a position yet, because I put a whole bunch of money into Peak, or a buy order, a whole bunch of buy order. Well, I already have money in Peak, but a huge buy order into Peak. Check it out, Peak KFF. You'll find a video on my channel if you want to look at that company. So what do I believe in? What am I doing? So perfection is just a direction. Do you remember perfection is just a direction? I don't buy or sell stocks because of relative or absolute valuations or any valuation. I use this as guidance, nothing more, nothing less. Personally, I am not buying until the stock price goes down a little more, although I think it offers great, tremendous value at this price, and time in the market time in the market beats timing in the market. Also, like I said, make sure to follow me on YouTube, Substack, Twitter, Discord, all that. The flow page will be linked in the description, which has all my socials in one place. And check out the full disclaimer in the description as well as right here. That's all I have for you today. I think this company is very interesting. I'm also looking at other companies such as Power Band Solutions, which looks really interesting. I'm looking at Qband, but they look like they have a customer concentration problem. But I'm just continuously researching companies. So if you do want to hear deep dives on various companies, subscribe to my Substack, like I said, Twitter, YouTube, and all that. Thanks so much for watching, and goodbye, guys.